Oh, hello there, it's John from Barefoot Accounting. Today I thought I wanted to cover something that tends to catch out sole traders, particularly when it comes to finding out where the tax bill is, because it's a bit of a shame that there you are, you think you're okay, and then suddenly the bill's a lot more than you expected. So the two things that people tend to not be aware of are national insurance contributions and payments on account. So national insurance, basically, it seems that everyone's aware of income tax, and there's a threshold for it, how much you have to pay, and it gets very popularised in the budget and everything. But one thing that people tend to forget about is national insurance. You still have to pay them, and actually they come in at a different threshold, and that'll and that will hit you. It's a bit exciting, isn't it? How to make tax more interesting, get attacked by dogs. And that comes in at 9%. And it's actually got a different threshold. It's about £8,500 you'll start paying that from. And there's also £150 of a flat fee you have to pay as well. So that's something that people tend to miss out when they're doing it themselves. The other thing is payments on account. Now the idea behind this is, if you think about it, the tax year finished at the beginning of April, and you don't actually have to hand in your tax return or make the payment till January, the end of January. So that's quite a lot of time, which is actually sort of almost 75% through the next tax year. So what basically has happened is, part of the system is, when you make your payment for what's due, if you owe £1,000 or more, you have to pay another 50% of what's due at the end of January as a kind of payment towards the next tax bill. So yeah, you can imagine if you're not expecting national insurance as an extra 10%, or 9% I should say, and you're not expecting the bill to be doubled, or not doubled, but get the extra 50% on it, it can be a bit of a shocker. You also then have to pay another 50% in July after the January as another part payment, and then when you get back to your next tax return, in January you have to pay the balance. I hope that makes sense. I've got a blog I'll put a link to further down, but it's just something to bear in mind. And it also leaves weight to the idea of actually stashing some cash behind almost every month so you can pay the tax bill, because it's really quite heartbreaking when people get to January, you give them their tax bill, they think they're all okay, and then it's like, oh, I didn't know about payments on account. So that can be a bit of a shocker for people. So if you want to be very crude with the figures, just put 30% of your profits into a separate account or something like that. So at least you've got enough. You actually should have more than enough to cover it, but it's better to have more than too little. Anyway, I hope this helps you. Toodaloo.